Hey, welcome back to Wait Let Me Invest. I'm Zuko, and today we're diving into the January update of my Vanguard Stocks and Shares ISA portfolio. My total portfolio is currently valued at £24,058.38. I added another £1,666 this month, so in reality, I've lost about £210 in the last 4 weeks. I also received my dividends for the last quarter, which was way below what I was expecting, and we'll take a look at that later in the video. My current personal rate of return stands at an impressive 20.36%. My largest position is still the S&P 500 with a total cash value of £11,687.08. I've invested around £14,512 this ISA year, steadily progressing towards the maximum limit by the end of the tax year, which I have a remainder of £5,488 to invest. Moving to the overall performance tab, the portfolio has generated an unrealized return of £1,452.63 since I started this journey way back in 2021. As you can see from the chart here, it's been growing steadily since I started this portfolio, with the high increase starting around April this year, when I increased my monthly deposits. Switching to the month-to-date view from the 9th of December, and what that will show you is that I've invested £1,666 this month, and it's seen a growth of around £227.94, which gives us a 1.01% rate of return. I've got around £1,229.50 of unrealized gains, and I've made about £76 of realized profits from selling some investments I owned in the past. My total interest is £2.53, which is the interest on cash held in this account through uninvested dividend payouts or leftovers from buying whole shares. And my dividends on the account is £161.63, which might not sound like a lot considering my investments, but I'm not too worried. It's a long game. I know this will grow over time, and I'll show you a chart of that later in the video. Fees were also taken recently as well in early November, around £6, bringing the total to around £17.93. I don't pay any tax on this, as it's a stocks and shares ISA account, which means that you don't have to pay any capital gains tax when you sell your investments or any income tax from the dividends that you've earned. Changing the view back to a month ago, and what you'll see is a very different picture. I've earned about £55.88 in dividends from the previous quarter, and I won't see any more of that until around March or April of this year. The month-by-month tab just shows how the market has pulled back in the last month. The S&P 500 is up by around 2% in the last month, but suffered a minor pullback in the last week. This resulted in me losing about £361.49 so far this month, bringing my total return to around £1,400. December was the best month I've had, gaining about £881 from the market performance, but that doesn't happen often, so I'm not too surprised by this minor pullback. Moving to the investments tab, you'll see all the products I've invested in since the beginning. I'm currently up 3% in the FTSE 100, 21% in the S&P 500, 7.78% on the FTSE All World ETF, up 13% on the US Equity Index Fund, which I no longer own, and I've sold all of this a month ago. So I don't own this, I don't own that, I don't own that. I do own these two, which I'm up now 15% on the Life Strategy 100 Equity Fund and a further 12% on the Target Retirement Fund. So as you can see, most of my dividends come from the S&P 500. So far I've earned £106 from that, which is not much of a surprise to me, because S&P 500 is the biggest holding that I have in my portfolio. It weighs about 40 to 50% of my current portfolio. This might not come as a surprise, but the S&P, as I mentioned, for all the reasons that I mentioned before, is also the best performing investment in my portfolio. The major tech companies make up most of its rating, and they've been doing really well, apart from Apple, who've been downgraded by Barclays because of some concerns that they have of the company's future. That 21% in capital returns equates to around £792, which is massive. So changing the time frame to a month ago, you'll see all the investments that I currently own and how it's been performing in the last 4 weeks. All these investments have gained a bit of money. As you can see, I bought around £168 worth of FTSE 100 shares. That's gained about £18. For the S&P 500, I bought around £781 worth of shares, and that's gained about £60. Same with the FTSE All World ETF. I invested around £737. I put a bit of my dividend payouts that I earned last month into the FTSE All World ETF. That's gained around £26. I put the remainder of my dividends into the Life Strategy 100 Equity Fund on top of my monthly deposits, and that's gained around £29.94. The Target Retirement Fund, I've invested around £200 this month, and that's also gained around £35. For the start of the year, my portfolio has been doing pretty good, I would say. I hope this continues, but you never know. Now, let's take a look at the holdings. So for the Life Strategy Equity Fund, I hold about 11 units, which weighs around 14% of my entire portfolio. Same with the Target Retirement Fund, it weighs around 14 to 15%, and I own 18 units of that, which is pretty close to what my goal is for both these funds. I want them to be around 15%, so I'm happy with this. The FTSE 100, I own about 56 units of that. It's currently rated at around 7% of my entire portfolio. I did mention in the last video that I want to bring this down to around 5%. That would mean that I'd have to decrease my monthly deposits into this fund, and I'm not entirely sure whether I want to do that right now. What I'm thinking is I'll ride out this tax year, continuing to invest around £200 into this account, into this fund, but in the next tax year, that's when I'll decrease it and put whatever I've decreased into the FTSE All World ETF. Talking about that, I currently own around 37 units of the FTSE All World ETF, which weighs at around 14%. This number is probably going to go up in the next 6 months to around 16 to 17%. And finally, we have the S&P 500, which is the largest holding that I have. It weighs at around 48 to 50%, and I have around 167 units of that. Another thing that I want to mention is, if you can see here, most of my funds, the average unit cost for all of them are lower than the last price of each fund. And that's because I'm dollar cost averaging into each fund monthly. What that means is that every month I would deposit a certain amount regardless of how the market is performing, and over time that would iron out. Jumping over to the Insights tab, this breaks down my investments by geographical locations, sector allocations, the top 10 investments, and also the performance of my portfolio over the last 3 months. We'll start off with the geographical locations. As you can see, most of my investments are focused in North America. Around 71%, 15% of that is in the United Kingdom, which is mostly because of the FTSE 100, as that's focused in the United Kingdom only. I have about 5% in Europe, nothing in Eastern Europe, 1% in Middle East, 4% in Asia Pacific, 2% in Japan, and that's pretty much it. Finally, my performance over the last 3 months. I started with £17,961 and 95 pence. I contributed around £5,000 and that's returned me £1,092 and 28 pence in unrealized profits, which gives me a rate of return of 5.47%. I have this sheet here that's similar to the Vanguard dashboard that tracks the number of shares that I have for each investment, the total costs, and also the cost allocation nicely in this diagram here instead of just numbers as you see on the Vanguard website. I've also made this nice line graph that tracks the total dividends and cash interest that I've earned throughout the portfolio's history. As you can see, the trend line is going upwards. We saw a steady increase here, and up to this point, that's when I increased my monthly deposits. It shot up. Now the line's it's going up. It's more upwards here. So I earned about £56 this month, 55, £56 in dividends. So for next quarter, I'm hoping to see somewhere around £66 or £67, hopefully more. That's all for today, folks. Catch you in the next video. Peace out.